talk to me about the most surprising and, I suppose, unsettling findings in this report.
Yeah, well, 2020 was an unsettling year across the globe, but it was really unsettling when we dug into the numbers about where female founding is going. And your intro said it all. It's been record deployment of venture capital, and yet there was a significant headwind that we put ourselves into thanks to COVID, where funding to female founders or mixed gender teams fell by 2.5%, and those are the lowest numbers since 2017. So there was not just a backslide; there was a significant backslide this past year, and a lot of that we attributed to risk reduction, a lot of people not being able to get out and network directly and engage directly with one another, and also just pattern recognition and a fallback to old styles and old muscle memory within the industry. And so there's been some progress and forward, there's been some light spots as we head into Q1 and kind of the second half into Q2 this year, but we shouldn't be complacent and think that we're done.
So, I guess the big question is why? I mean, if you have more money coming in, why not take that risk on women? Why is it still seen to be more risky to invest in women?
It's actually not more risky to invest in women. The numbers and the economics clearly show that investing in women is a prosperous and smart decision. For every invested dollar, a woman on average will return 2 times the amount of revenue that her all-male counterpart team might. A woman will exit her company faster. So really, we have to focus on the fact that there is just bias in the system. And so we look at a couple of different things to make a change. One is to diversify the venture firms themselves. There are too few female venture capitalists in the ecosystem. It's still dominated by white men. 64% of the venture capital firms don't have a single female partner in their ranks. And so when it comes to analyzing opportunities and really attracting the type of talent that they want, their networks are closed networks. So we really need to open up those networks by inviting more women into venture capital. Number one. And number two is to just reverse bias in our process of how we look at people, but we really and evaluate opportunities. But we really see this as a networking opportunity. We certainly know for years that the evidence out there is that this is not a pipeline problem, but it's an access problem. And opening up people's networks to female founders and especially underrepresented founders and brokering those introductions is going to be key to unlocking the potential that is in the market. And the potential is enormous. There's trillions of dollars of value waiting to be mined if we can open up these networks.
The picture is even darker for Latinx and Black founders. What did you see there?
Yeah, well, the numbers are appallingly small. So we are partners with Digital Undivided, which does the Project Diane study, and only 0.64%, so less than a percentage point, still closer to zero than anything meaningful, is going to Black and Latinx founders, despite the fact that Black female entrepreneurs are the fastest growing segment. And so there's just really not there's been very minimal movement going forward. I think the industry as a whole, though, is starting to turn their attention towards looking at Black female founders and Latinx female founders, underrepresented founders in general, and creating vehicles and opportunities to meet these founders, to get access to these founders who they haven't traditionally have access to, and actually to deploy capital for them. But that's part of why All Raise exists, is to continue to measure the progress in the industry and what we can do to move the needle forward for Black, Latinx, and other underrepresented founders.
So as we come out of the pandemic, what trends are you seeing? Are you worried that Silicon Valley is just going to keep on missing out on the talents of women and Latinx and Black founders?
Well, certainly, if we just look at 2020, there was a lot of headwinds that had stalled the progress that we had seen being made going forward. But there's also tailwinds coming out of 2020. The social reckoning movements that happened in 2020 around race and around gender certainly has put kind of tailwinds into our sails. And so when we look at, there's a lot of promising data going into 2021. Today, for example, the IPO of Figs, two female co-founder led company, valued at $4.6 billion today. That's a positive trend. And we've seen a lot of other IPOs as well. The IPO of Bumble, the IPO of 23andMe, Hims and Hers, all of these, Poshmark, all with female founders. So we're starting to see the crescendo of IPOs and exits and continue to shine the light on these incredible opportunities. But we're also seeing that in Q1, we did see an unlocking a little bit of the potential. So there were 687 deals done for female co-founded companies, which represent about $9.8 billion in capital. So there's some trends that are indicating things are moving in the right direction, that we're unlocking the stasis that we had and tapping into these networks. But we shouldn't assume that we're done. We'll be interested to continue to track the data in Q2 and look at what's happening both in the unicorn status and kind of who's in the hopper and who's coming out, but also really there's an opportunity for the industry to give birth to the next Amazon, the next Facebook, the next Netflix that would be founded by a female funder or a female entrepreneur. And that's really going to happen at the highest levels, and looking at who are those seed stage companies, who are those Series A entrepreneurs, and really funding them, opening up your networks, being intentional about meeting some of these incredible founders that are out there.